Okay, you're live.
Okay, good morning, everyone. We're at 8:30. This is the meeting of the City of Annapolis Police and Fire Retirement Commission. I am Joe Simo, the chairman. We have a quorum present. An agenda for the meeting was posted. If any of the commission members have any items to either add, or particularly to add to the agenda, hearing none, what we will do is begin with an open session and then we will go into a closed session as noted on the minutes. The closed session will deal with the financial issues concerning the plan to consider the investment of public funds. And with that, let us, there's no old business item that I am aware of to discuss in open session. And I will move, well, let me, before doing that, there were minutes circulated both for the open session and the executive session. With respect to the minutes of the open session, do I have a motion to accept those? Are there any changes proposed?
Move acceptance of the minutes.
Second.
Those in favor?
Aye.
Aye.
Major Herman, are you also in favor?
Yes, sir. I said aye. Sorry.
Okay. So those minutes are passed. We will now have a review of the investment markets. Mr. Jones.
All right. Thank you, Joe. I have two documents I could review. One is a single page, and it's an update of the equity and fixed income markets through the end of September. And then the report that we have is as of August 31st. We don't have a September 30th report, but what's your pleasure? Do you want the update through the end of September, or I could do that and then go into the report? Or do you want me to go right into the report?
Why don't you give us a presentation of where we are at the end of September?
Okay.
We will then close into executive session to review the specific investment performance.
Okay, great. So I just screen shared, and hopefully everybody can see it, the single page. And I also sent this out with the materials last week. And so this is at the close of business on October the 1st. So it does include the one day in the month of October. And I highlighted, there's a ton of numbers on this page. So I highlighted the year-to-date column. And you can see that we were still well into positive territory when you look at large company stocks, the S&P 500 index. Through October 1st, the S&P was up 6.1%. And as we've discussed in the past, the market drivers have been relatively narrow. And when it's basically been driven by the growth side of the market and to a large extent, technology related companies. So when you look at the growth part of the market, the Russell 1000 Growth Index, the fifth line down, amazingly is up 25.78% through October 1st, where the value part of the market is still in negative territory, negative 11.4%. And the component within growth, which has had a very large contribution to total results, are what are referred to in the media as the FANG stocks: Facebook, Amazon, Apple, Netflix, Alphabet, which is the parent company of Google. And then also the M that doesn't fit into FANG is Microsoft, also a very big company and has been a big contributor. And you can see that year-to-date, Facebook is up about 30%. Amazon is up more than 74%. Apple is up more than 60, Netflix is up 63, and Alphabet up about 11.5%, and Microsoft up roughly 36. So
Ian, when you have year to date, are you starting January 1 or are you starting on our fiscal year?
no, this is calendar year to date, January 1. Yeah. So yeah, this is for the 9 months, basically through the end of
Right.
September.
Okay.
And so these companies have had a huge, the market indices are market value weighted. And so the bigger companies have a bigger contribution to return, both on the upside and the downside. And we've actually seen a little bit of a rotation away from the growth side of the market over the past month or so, but still, as detailed here, the growth stocks have clearly led and have had a huge contribution to performance over the 9 months of 2020. Depending upon where your active manager fishes from, then has a big influence on return. And you're going to see that when we review the performance for the plan in total and the individual managers. And as an example, you'll see Lomax. It is a large cap value manager. They fish from that large cap value pond, and they're still firmly into negative territory because of the influence of value oriented stocks. If any of you lived through this experience back in the late 90s, 97, 98, 99, that was referred to as the dot-com bubble, where the likes of Cisco and Intel, Microsoft was actually around back then as well, but it was the dot-com stocks that drove the market through unprecedented highs through the end of 1999 and into the first quarter of 2000. And then we had a tremendous rotation away from growth to value in March of 2000, and value was the leader for the next several years. And so in my personal opinion, it's not, I believe that there will be a rotation at some time. It's not if it's going to happen, but when it's going to happen. And that's the difficulty, is that picking the inflection point is really, really difficult. And the market doesn't go up for logical reasons or fundamental reasons. The market goes up for at times it does, but the market also goes up for technical reasons. And technically the government has thrown a tremendous amount of stimulus at the market, and there's that term, don't fight the Fed, and that is definitely lived to be true since March of this year, where with the government being stimulative and keeping interest rates low, buying back bonds, there's really very little alternative for many investors because many investors don't want to go and buy a investment grade bond that is yielding 1% or less. And so that's why I think investors, ultimately gravitate back to the equity market. And there's many investors who are embracing these, more speculative technology FANG type stocks, which have driven the market. The market's also reacted to anything positive related to the virus, whether or not it's sort of logical or not logical. And so I'm just looking at my screen, and the market is up this morning, and I have to assume it's up as a result of the president releasing himself from the hospital yesterday, and as troublesome as many people have with mask and his disregard for the severity of the virus, there's others who might view that as positive, and that has a stimulative impact on the markets and upward pressure on stock prices. So The question is how much longer can we have this sort of positive experience? There's been also some troublesome parts of the market, like energy. If you look at the energy sector of the S&P 500, it's down 50%. From the market low on March 23rd, energy is up 25%, but still with oil prices at the prices that they are, and the lack of demand for energy because we aren't getting in our cars or airplanes and driving and consuming energy, that has had a big negative impact on the energy market in general. And you can see, I'm not going to go through the individual sectors, banks, financial stocks down 20%, and then in industrial and real estate stocks down as well. Go ahead, Joe.
No, I was going to say, with that overview, perhaps we should close the open session and move into the specific performance of our fund and how we are directly affected, our managers.
Okay.
And with that, Hillary, I would ask that we proceed.
We need to move a motion.
May I have a motion to move into executive session for the purpose of looking at our investments and the other agenda items?
So moved.
Those in favor? Aye.
Aye.
Okay.